Good afternoon, this is Christy with Van On & Company. It's Friday, September 11th. I'm just going to go over the markets for the day. You did have a USDA crop report, and that made some movement out of the grains. You had soybeans close 20 cents off their low for the day, so you got some big movement there, even though you didn't have a whole lot out of there. We'll start over with the corn. Corn closed up 12 3/4 higher on the day. That makes it 25 cents higher on its weekly chart for the day. So you got the biggest move there. You had a friendly report came in here with 167.4 corn yields and a 1.592 carryout. And even though that's not overly bullish by any means, you were able to find some support and muster that up. You have a lot of people saying that that carryout or that yield needs to change and be cut a little bit more moving forward, but USDA did start to cut it. They cut it just a little bit. People were thinking maybe they wouldn't even cut it at all, but they are expecting it to decrease a little bit yet. But you saw that support come through, like I said, on the week, 25 cents higher. Soybeans actually had a little bit of a negative report. They increased yield to 47.1 and a carryout of 450 million bushel. And so that was actually negative, but it wasn't negative to the point where it was saying, okay, let's go put new lows in this soybean market. It was able to rally back with corn rallying on the day, closed up just 1/4 cent higher, but in the green nonetheless. And like I said, 20 cents off its low for the week. It was up 10.5 for the week. Moving on to wheat, Chicago wheat up 7, Minneapolis steady, Kansas City up 4 3/4. That puts Chicago wheat up 17 for the week, Minneapolis steady or close to steady, a little bit higher, and then Kansas City up 10 for the week. You didn't get a whole lot there. It looked like their carryout came in at 875 million bushel carryout. Really what you had is just corn dragging it with and able to bring it up higher. The wheat market didn't want to do a whole lot overall. So overall in the scope of things, you're still trying to find out what you're going to have for a yield out of USDA. You have a couple more crop reports before you'll start to get to a more firm number. You have harvest coming along that you're going to hear some private estimates starting to come out there and see how good or how bad it is. Moving on into the meats, you had a pretty ugly day in the meat markets. Live cattle down 227.5, feeders down 350. That puts them actually about steady on the week, a little bit lower on the week. It looks like bids of 140 live, 219 dress. That's steady with last week's trade. Hogs were down $1.20. And cash cutout was down 3 cents there. Choice cutout for cattle were down $1.08. Select was down 97 cents. So overall pretty ugly there. Moving forward, you're starting to hear a little bit of yield reports coming out of harvest, but one big thing to watch for is Federal Reserve is going to come out here with their meeting information. And what that's going to look like is a lot of people were expecting and just thinking that this September we would see an interest rate increase. And that's where we're going to find out whether or not they're going to increase that interest rate finally, or if they're just going to push it along. You've had a drastic decrease in the stock market over the last month, so the dynamics have changed a little bit. But that is going to be a big one, and chances are when that does happen, the news that it comes out, it should move the grains, it should move the US dollar, and you'll see a little bit of volatility there. But overall, you're just going off yield reports coming out of harvest for grains. I do have to close with the disclaimer, trading in futures and options involves risk of loss and may not be suitable for all producers. Have a great day.